What's going on, everyone? So today I'm going to be starting a short little series on how to use certain things, like how to use exchanges, how to go about like buying crypto and stuff, or more likely how I go about doing it. As you guys all know, this is not financial advice. I'm not a financial advisor, so keep that in mind as I'm going over all of this stuff. But I'm pretty much going to be showing you guys how I use these platforms and how you can kind of go over how I'm using these platforms, and then kind of find your own way about going and investing, making trades and stuff like that. But anyways, guys, let's go ahead and get started with the introductory video. This is gonna be my first video of this series, and hopefully we got some more videos heading this way in the near future. But let's continue on here so I can get started in teaching you guys exactly how I use Binance.us along with other platforms that are all mostly similar to this. All right, so first things first, what we are looking at here is we are on the Binance.us exchange. We are looking at the Bitcoin / US dollar pair. So first things first, these are going to be pairs. As you can see, we have the ADA, which is Cardano / US dollar pair. We have all these US dollar pairs. So USD is always going to be US dollar. There's also other pairs like USDT, which would be US Tether. And then there's also USDC, which is the US dollar coin. So there's going to be different pairs. So if you wanted to buy with cash, you would do a ADA / USDC, USD. So if you wanted to buy with cash for Bitcoin, you want to buy Bitcoin with cash, you would do Bitcoin / USD, US dollar. So with that out of the way, now let's check this out. This is the price of Bitcoin currently. Bitcoin is trading at $47,220.62. And as you can see here, the price is actively moving because Bitcoin is a 24-hour a day, 7-day a week trading asset. So we are now looking at here, this is the 24-hour change. So over the past 24 hours, it has gone up 0.56%, or $262.20. As you can see here on the 24-hour high, the highest Bitcoin has gone in the past 24 hours is $47,950, and the lowest 24-hour low, we have gone $46,759.36 as the lowest point in the last 24 hours. And as you can see here, we are not exactly close to here or close to here. We're kind of like teeter-tottering in the middle. But anyways, we're looking at the 24-hour volume now. So volume, guys, we're going to go over volume here in a minute. So the easiest way that I can kind of explain volume is the amount of money that's flowing in and out of a specific asset. So like, let's say you want to buy Bitcoin. This volume is the amount of money that's been going into Bitcoin in the past 24 hours. So in the past 24 hours, Bitcoin has seen $20 million go into it. $20,346,682.28 to be exact. So that's how much money has flown into Bitcoin in the past 24 hours. So volume, dollar volume, is the amount of money that's going in and out of an asset, the amount of money that's being traded pretty much and invested. So that is pretty much a quick crash course touchdown on what volume is. Okay, so now we're going to be looking at the chart here in a minute. So pretty much, as you can see, these are the dates: 2021. We have February, March, April, May, June, July, August, goes all the way down till now. So this is the dates down here, and here are the prices. You can kind of scroll this here, and then you can see up here where it shows the high, which is the H, the low, which is L, and then you can see like the changing in prices and stuff like that. And then there's also the time and date right here for if you wanted to check that. You can also zoom in and you can look at these candlesticks. I'm gonna have to go over candlesticks in a different video because this is pretty much like introductory type of video, but pretty much with the candlesticks is kind of self-explanatory. As you can see, when the price is going up, the candles are green. When the price is going down, the candles are red. So that's pretty much a quick crash course on candlesticks for you guys. Another thing is the price on the chart will always be right here. and the chart is always going to move to the right. The chart will never move to the left. So always keep that in mind when you're looking at a chart. The price is always going to be moving to the right, whether it's going up or down. The one guaranteed thing is that the price is going to move to the right. So there's that. Next up, we are going to take a look here. So pretty much this is a order book right here. So basically what the order book is doing is showing you like pretty much what buyers are buying Bitcoin at and what they're selling it at. As you can see here, the green, like I said before, is the buy side. The red is the sell side. So pretty much as you can see right here, we have a sum of 0.00003 Bitcoin and a sum of $14.30. Let's see here. We also have other orders here. As you can see here, we have one that's a little bit more money, which is a sum of 0.66 Bitcoin for $31,000. So that's how pretty much we read that here. And if we went to the sell side, we have a sell for, and this is constantly moving, so it's gonna be hard to like kind of get this to stay still. We have a sell for 0.18 Bitcoin, which is around, yeah, see it's moving. Yeah, this is moving quick, but you guys can pretty much see what I'm talking about here. So this is the buy side, this is the sell side, and the orders and the amounts of Bitcoin are right here. And then the total of the Bitcoin is on this side with the current price of Bitcoin itself right here. And this is the order book. And down here we have the filled orders, guys. So what a filled order means, if your order is filled, that means that you were actually given the buy that you wanted and the order went through. So if your order gets filled, that means it went through. If it's red, that means that's somebody basically they sold and got their order filled, so they were able to sell. And if the order is green, that means the person that was buying was able to buy the amount that they wanted. And here's the time at which all of that happened. You can scroll down here and pretty much see what people are buying and selling for and getting their orders filled at. And that can kind of give you a range of where exactly the market's going and where you may want to buy in or sell at, depending on which side you're sitting on right now, whether you're bearish or bullish. So pretty much, guys, with being bearish means that you're thinking the price is going to go in a downwards momentum. If you're bullish, you're thinking that the price is going to go upwards. It's okay to be either bearish or bullish, or you could be both in between, guys. So there's that with the bears and bulls. Another thing that I want to talk about now is placing orders. So here, as you can see here, there's buy. So you could do a limit buy, or you can do a market buy, or you can do, we'll jump into stop limits later, but here's limit buy and market buy. So if you're doing a limit buy, then you would have to set the price limit at what you want to buy at, right? So let's say your limit is $47,328. That's going to be the limit that you want to buy at. You put how many Bitcoin you want to buy at. So let's say I want to buy 5 Bitcoin, which is a lot of money, as you see there. Pretty much what would happen is the price, your order would not get filled until the price hits this exact amount here. So the second that the price hits this amount here, your order would get filled, possibly depending on like the sell volume on Bitcoin and whether or not anybody wants to sell it to you at that limit. So if the limit drops here and there is enough sell volume, then your order would get filled and you would get your 5 Bitcoins. If there's not people that are willing to sell to you at this price, then your limit order would sit there until someone ends up selling. And once somebody sells at that limit, then pretty much your order will get filled along with any other orders if there's enough supply. So pretty much with supply, that's how much Bitcoin is moving around. And sometimes people lock the supply up by putting their Bitcoin in wallets and stuff like that, or they just hold on to their Bitcoin and they don't sell it, they don't buy anymore, they just leave it sitting, they go long on it. But anyways, that is pretty much that with limit buys. With limit sells, it's the same exact thing but reverse. So pretty much you have it set at this price here, and let's say you want to sell 5 Bitcoin. Pretty much you can't sell 5 Bitcoin until there's somebody here on this end that is buying 5 Bitcoin for this price or possibly even higher. And pretty much it'll fill that order out as well. So Now we're gonna move on to market buys here. So I'm just giving a really quick crash course, guys. There's a lot more that goes into a lot of this, but this is pretty much just like the basics. I'm pretty sure you guys, after you're getting the basics from me, you can go ahead and figure the rest out on your own. It's not that hard. Definitely not that hard, so I'm pretty confident that you will be able to figure this out. So here is market buys. So what a market buy is you're buying it at the current market price. So you're not buying it at a set limit. You're willing to buy it at whatever price the market is willing to source it for you and get it for you at. So let's say that you put in a market buy, and so you see here how before we were able, on limit orders, we were able to put a price that we wanted to buy at. On market buy, you don't put a price because the market actually finds the price for you. So this could be good or bad at sometimes, depending on how many people are willing to sell or buy, depending on whether you're market selling or whether you're market buying. So this could be good or bad. So pretty much why this could be good or bad is, let's say you're trying to buy at a lower price, but you hit market buy and the market can't get you anything low, but it gets you something a bit higher than what you're willing to spend for, then you're out of luck. But if you're trying to get in on something and it's moving very swiftly, market buys are going to be your best friend, because if you put in a limit buy, sometimes that limit order may not get filled in enough time, and the price will continue moving forward depending on the amount of momentum with the dollar volume that's flowing in. So pretty much with market buys, let's say you wanted to buy 5 Bitcoin. You would buy a market buy of 5 Bitcoin. The second you hit buy BTC, your order will be filled and you will have those 5 Bitcoins in your wallet, in your possession. So you won't have to wait for it to get filled or anything. It just happens that quick. You'll have it that quick. So same thing like if you wanted to sell. So if you wanted to sell, as long as there's some sort of volume, the second you hit sell, boom, you have your cash that you got for selling whatever you were selling. So that's how that works right there with market buying and market sells. All right, guys, so next up we have the open order. So pretty much if you make a buy here on the limit end, then you would have a open order until that buy got filled. And if you had a sell on the limit end, you would have your open order here until it got filled. Same thing with if you had a stop loss or anything like that. So pretty much with a stop loss or a limit sell, if you have a limit sell, then pretty much what your limit sell would be sitting here until it will sit in the open order until that limit sell got triggered and the price hit the limit, and your sell order got filled. So the second your sell order gets filled, it would move from the open order to your order history, meaning that your order was filled out, and it would end up in your trade history and whatnot. So next up, we are going to come here and we're going to check out the trading view. So pretty much the trading view is a little bit more in-depth chart where you can get your moving averages, which is the MA right here. And then you can get your volume down here. It'll show you the volume, but in candle wicks, as you can see here. I'll hover over this candle right here from back earlier in the year. As you can see, it says 4.518K right up there, 4.518K. That's the amount of volume. As you can scroll right here, this is a negative amount of volume, and so on and so forth. And as you can see back here, the volume was actually going up and fluctuating pretty high, and then going low at a fast rate as well. And now we're kind of just trending down. Whenever the volume's trending down, that's usually meaning that the price action is going bearish. And like I said before, if something's going bearish, that means the price is it has a higher chance of going down than it does of going up. As you can see here, we've been on a downtrend for quite some time, and you can pretty much, it's self-explanatory when you look at the chart. You can see that the price has just been trending downwards, but when you look here, it was recently trending upwards. So like that's how the trend is. The second it starts going up, this is a trend, and it starts to set its own trend, and then it starts to level out here, and then you can start seeing it trend down. So the chart's going to be continuously trending up and down, and that's pretty much how that's going to work, guys. I'm going to go over like moving averages and Bollinger Bands and stuff like that in another video, but that's pretty much a crash course on what to look at for here. I'm just trying to pretty much set the basics with like buying, selling, looking at the chart for right now, and I'll go into the more in-depth things with the chart later on in another video. But next up, we are going to look at the depth. All right, guys, so next up we have the market depth, which is pretty much the depth of the order book, basically. So what we're going to be looking at here is this is the amount of buying. So these are all the buyers right now of Bitcoin, and here are all the sellers. As you can see, there are more buyers than sellers right now. So the buyers are trumping over the sellers, and that is always a good sign. So if you see the green end higher, I'll just basically put it easy for you guys. If you see the green end higher than the red end, that means that is very good for the market at that given point in time that you are looking at it. In my personal opinion, this is not financial advice, but usually whenever you see the green side higher than the red side, which is the buys are higher than the sells, then that's a good sign for the market, and it's showing that the market is in a bullish sentiment. But whenever the sell side, which is the red side, is higher than the green side, it means there's more people trying to sell and exit the market, which means it's going in a bearish direction, and that means the price is usually going to head down. So pretty much, if there's more people that are trying to buy something, that's usually a good sign. If there's more people trying to sell and run away, then that's usually a bad sign. Like if you're going towards a building and you see people running away, that's usually bad. If there's a lot of people going into the building, that means there's a sale, and it's usually good. So that's how you can look at it in that sense as well. So pretty much that's what we're looking at here, and you can kind of scroll here. You can kind of see the percentages for the amount of people that are wanting to buy and sell at what given price, what given side. So as you can see down here, here's the actual buy price down here, 33,000. There's a ton of people that are willing to buy if the price goes that low. And then as you can kind of scroll closer in, it gets closer to the actual price that we're sitting at now. And there's 46,000. There's 0.8% that are willing to buy at that price. And then as you can see on the sell side, there's the same exact thing. There's that many people willing to sell at this specific price. And pretty much we're going to go over walls really quick. It's going to be kind of hard to kind of see this with this here. You can zoom in and zoom out if that makes it easier for you guys. On most of these depth charts, they'll allow you to zoom in and zoom out, so you guys can kind of get a closer or far drawn out view. Okay, so pretty much what happens is they both start here at the 0% line, right? And the second sells and buys start coming in, that's when they start differentiating, or whatever that word is that I'm looking for, and walls will be formed. As you can see here, once there's a specific amount of buyers or sellers at any specific given price that starts to become popular, that's what creates a wall. So as you guys can see, there's kind of like a wall forming on both sides, and the buy wall is way higher than the sell wall, as you can see here once we zoom all the way out. So that's another way to look at things. So if you see a huge wall, like let's say we have this small wall right here, this is a wall. So we have a wall right here, and the wall is around the 47,280 to about $47,290, right? So there's a wall right here for sellers. There's a buy wall right here from $47,000 to $47,022. So there's a buy wall right here. So these little small areas are walls, and then you can also look at walls as the larger formed walls as well. So that's pretty much how we look at walls and whatnot. And this is the depth chart. This is going to be called the market depth, or the order book, depending on where you're looking at. This is the order book as well, but here's another look at the order book, which is the market depth, but I also like to call it the order book as well. So that's pretty much what we are looking at here when we're looking at market depth. And last but not least, I want to touch on withdrawing and depositing, because this can get very complicated with cryptos and stuff like that. So as you can see, here is my portfolio balance for my $250 account. If you guys aren't following this, I have a whole playlist for this. This is one of my small accounts that I started up just to kind of see where I can take $250 from. Right now I have over $317, but I have the other amount in staking. You'll see that if you check out the playlist. So it's in a different account. So like you just have to check the video out. But anyways, guys, let's talk about withdrawing and depositing really quick before we close this video out. So as you can see, this is HBAR, also known as Hedera Hash Graph. I have 1,000 of this token pretty much. So here is the network. The network is going to be Hedera Hash Graph because Hedera Hash Graph is its own entity, right? But there's also things called like ERC20, which is under Ethereum. So there's ERC20 tokens and stuff like that, but we're going to have to get into that in another video, or you guys can go to a different video and check that out and pretty much learn about that, because right now what we're talking about is withdrawing. So let's say I wanted to withdraw, let's scroll up here. Let's say I wanted to withdraw 50 Hedera hash graphs, right? So 50 HBARs. It's going to ask you for a recipient address. So pretty much what that is who you're sending it to. So whoever you're sending it to, that's their address. Let's say their address is something, but you're not too sure what the address is. You ask the person for the address, or let's say it's your own address, actually. Let's say it's your own address. We would pretty much go ahead and we would do this. We would go over to Hedera Hashgraph in your other wallet. So like, let's say you're trying to send it from Binance US to your Coinbase wallet, right? So you're trying to send it from Binance exchange to your Coinbase exchange. You would go to Coinbase, you would hit the deposit area on your Hedera Hashgraph in Coinbase. Hedera Hashgraph is not on Coinbase. I'm just using this as an example. You would go to Coinbase, you would hit deposit, and then the second you hit deposit, then it would pretty much give you an address, something sort of like this here. It would pretty much give you an address sort of like this. You would hit copy on said address, and there's also memos. So if your crypto has a memo, always remember to grab that memo, because if you don't, you are going to lose that money more than likely, and it may or may not be refundable, and you may not be able to get your money back. So always check for a memo if your crypto has a memo. So pretty much with this, we would copy the HBAR address, and then we would copy the HBAR memo from the deposit area of wherever we're trying to send that crypto to. So if you're trying to deposit that crypto on Binance, you would go to your Binance and you would get the deposit address for your HBAR, and then you would get the deposit memo for your HBAR, and then you would route your way back over to the withdrawal from wherever you're trying to pull that money from, and you would paste those two addresses, and you would paste the address and memo in, and then you would hit the amount that you want to send, and then you would send it. So pretty much, let's say we are trying to send it and we got the address, and the address is 1, 2, 3, 4, 5, and then the memo was 6, 7, 8, 9, 10. So then we would pretty much go ahead, we scroll down here, we preview withdrawal, we'd hit send. It would ask us if we were sure that the memo and everything was correct before we sent it, and then we would send it off, and then seconds later it would end up there. And the times do vary depending on what exchange you're using to send, the amount of people who are on that exchange that are trying to send as well, because the amount of people definitely does hold the exchange up. So whenever there's very volatile times, let's say the price is skyrocketing up and there's a ton of people trying to cash out, then you could be stuck with all of those people and the exchanges get backed up. So that's why you should always have multiple exchanges that you use. Don't just use one specific exchange. In my personal opinion, that's what I do. This isn't financial advice. I'm not a financial advisor, but there's a way that you can kind of combat the exchanges getting backed up by having different exchanges, because some exchanges back up while others don't, and then you have a chance to get out somewhere else versus there. So like, I always try to hold a little bit of HBAR on one exchange, hold a little bit of HBAR on another exchange, and then hold a little bit on a third one as well. And I also have a hardware wallet, which is my Ledger. I'll leave a link into the description below for that. Pretty much what the Ledger does is just pretty much protect your assets, because usually with exchanges like this, if you don't hold the keys to your crypto, then it's not your crypto. There's a saying that people like to go with: not your keys, not your crypto. So pretty much what the keys are, they're your private keys, and it's pretty much what gives you access to personally like owning your crypto. And the exchanges, certain exchanges don't give you keys, so technically they own the keys to that crypto. So the crypto is technically theirs, and they're just leasing it out to you basically, or loaning it out to you basically. So that's how that works. So pretty much right here, this Hedera hash graph isn't technically my Hedera hash graph if you want to look at it that way, but what I have on my Ledger is mine, you know what I mean? So there's how you look at it with that. But anyways, guys, with withdrawals and deposits, that's how that works. If you guys have to come back to this video and come back to different segments in this video just to kind of get things down, that's completely fine, because I would rather you guys come back and like just hammer down on one specific part of a video that you weren't really trying to, like, we weren't really understanding, and then trying to understand it, rather than just skipping out on a part, because this is kind of like building blocks, pretty much like with anything in like school, like with math and stuff. This is building blocks, and if you miss one part of this, then it could kind of mess you up in for future things later on in crypto. But that's pretty much how this all works for right now. This is all I'm going to do for today's video. I'm going to try to figure out a way where I can kind of like jumble everything up and make it a bit more organized and easier to explain. But this is pretty much how I've got it out so far today. But this is definitely all I've got for today's video, guys. If you guys have any questions, leave them in the comment section below, and I will definitely get to you, and I'll try to help you out to the best of my abilities. But that's all I've got for today's video, guys. If you like my content, leave a comment and subscribe and hit the like button, guys. That definitely helps the channel out. If you guys have any questions, again, leave them in the comment section below, and I'll definitely get to you. But anyways, guys, I'll see you guys in the next one.